As you all know, I'm the credit consultant in the group, and today I just wanted to talk about a lot of changes that's been implemented in the credit world since COVID happened, right? So as you know, usually when you're applying for anything, they first look at your income and they look at your credit as well. But first things first, I wanted to talk about managing your credit during COVID. So things been quite, different in the sense of, the fact that we have to, have continue social distancing when we're out. But even in the credit world, we have to take a different approach in managing your credit. So step one is being really proactive and contacting your lender. So a lot of wrong information has been just kind of out there when we were kind of all quarantining at home about mortgages, about credit cards, how you could just defer them and not pay. So what a lot of people understood it as is without contacting your lender, you would just stop paying. So a lot of people have actually had continuous late payments just pop up on the credit report because they had the wrong information. So first step would be contacting your lender. Even right now, if you're having difficulty paying your mortgage, or even if you're having difficulty paying your credit cards or even auto loans, you could defer your payment. But it's not that you don't have to pay the 3 months of payment, but that would be added onto the principal for you to pay eventually. So in order to be eligible, you have to call the lender to see if you are qualifying with all the conditions they have. So for student loans, a good thing with that is for any type of federal student loans, any principals, any interest, all of that will not accrue until end of this year. We're not sure, who's going to be elected for the president, but depending on that, a lot of things can change, or it could be even extended to next year. So a lot of people were able to take advantage of it, but you are able to do that even right now if you are qualifying with all the conditions that the banks provide. So step two would be preparing to leverage your credit. So what I mean by that is kind of knowing what your credit looks like for you to be able to manage your debt well in order to have the right savings and investment and being able to build your credit and your assets along the way. So why is credit so important? We all know that, it saves a lot of money in the long run. I'm going to talk about a couple car loan examples of my clients, but if you have excellent credit, instead of your friend having to pay 20% on an auto loan or 15%, you'd be paying only 2% a point or even less than that. And having good credit can save you a whole lot of money in the long run in terms of interest. Also gives you peace of mind. This kind of goes to show how having good credit can be such an important asset to you, especially, we didn't see COVID coming. We didn't see PPP loans coming out. We didn't see the SBA loan for, to help all the business owners. A lot of people made great money in the last couple of years and filed taxes, but a lot of them were not able to take advantage of getting SBA loans for $150,000, $100,000 because of their credit, because it was solely stringent upon revenue of the company and the owner's credit. So having great credit can not only give you the peace of mind, but in the back of your mind that if any needs be, you could tap into your credit to kind of help you through the difficult time to fight through that with your funds and with your credit. Also, really works to help you save a lot of money for larger purchases. I'm sure Linda can tell you how so many people want to purchase homes and they want to get into it right away, but realizing that they don't have credit. They don't even have a pre-approval ready to get them funded. Great, if you have a 30% on a $500,000 mortgage, it's great that you have that down payment, but you still need to borrow a lot of money from the bank. And that's when credit comes in clutch. And also, you can really utilize that for your business needs. As you all know, business credit is all stringent upon the owner's credit. So if you want to build your business credit, your personal credit has to be strong enough to help you obtain more business credit. So I just wanted to show this. As you know, this is kind of a chart of what your credit score could range from, right? It says serious risk is anything below 570, but I've seen 400s, even 390s. And I've seen as high as, high 800s. But the funny thing is, before COVID, pre-COVID, you were able to get approvals, even in the good range or fair range of 650 or, just close to 700. But now, Chase, for example, if you want to get a mortgage, they want to have you down pay a lot more than before, and your minimum credit is 700. So that kind of goes to show how there are a lot of changes in the banking world, a lot of changes with approvals. So having great credit and improving your credit now is actually the best thing to do in order to prepare. So as you know, credit score is kind of like GPA. I like to say a bar of gold or just a bar of cement. They could weigh exactly the same thing, but the value is so different. But same goes with your credit. You could have an 800 credit score, and your wife could also have an 800 credit score, but does a credit score weigh the same and mean the same? Not necessarily, because one person could just have multiple old credit cards as to another spouse having to manage great student loans, mortgages, credit cards, auto loans. Having diverse portfolio on your credit is actually going to help you strengthen up your credit. So this is a Honda Accord case for my client. This client came in and she was paying $578 a month. You see that, $578 a month on a Honda Accord. And I looked at her paper and I realized she was paying 23% in interest. So if I do the math of $578 times 73 months, because that was the terms on her agreement, she was actually paying $42,000 on a $22,000 card. Can you believe it? She's paying extra $20,000. So what we did with her is we improved her credit in the, I would say, 4 to 5 months of span of time, and I reduced her monthly payment to $360. Her interest rate went down to 5%. So she's actually saving over $20,000 on the car payment alone. So that kind of goes to show that a lot of the times when you walk into an auto dealership, for example, their main goal is to sell that car to you. They don't necessarily have the best interest of you having to save money. So you want to kind of make sure that you go through, your finances and also figure out how much you're paying on your credit card. How much interest are you paying on your auto loans? Because if you just pay the minimum payment on your credit card, for example, you're paying them for over 10, 11, 12 years of time, but you're actually paying triple or even more than what you initially borrowed or have put on the card because the interest is so high. But if your credit's great, you could actually leverage it the right way for you to obtain bank's money, but not pay that high interest, but use their money at almost no interest. So that's kind of the key right now in times of COVID. We're not really necessarily sure as to what's going to happen in the future. I stress all the time that it's really important to obtain and utilize and leverage your credit the right way so that you still have your savings, but you don't pay such high interest on an auto loan. Even mortgage, for example. People talk about how rates so awesome right now. Yes, it's true. The rates, one of the lowest that it's ever been, but it's your great credit along with your income that can secure that low rate for you. So rule 3 is banks are relational and go long and far with a tier 1 bank. So this is one of a very horrendous example. I'm sure all of you know Santander Bank, right? This client came to me and she was paying $856 on a car. And this was just not even a luxury car. It was just one of those, SUVs that she bought. And when I did the math for her, 856 times 72, she was paying $61,000 on a $35,000 car. So she was actually paying $36,000 more to Santander for borrowing $35K. So she was actually out of the 856, $350 were solely going towards the interest. So this kind of is a perfect example. This is not a top tier 1 bank where they're willing to give you approval anytime at a risk of such a high interest rate. So if you build a relationship, let's say that you're building a relationship with Bank of America or Chase, if you have an account with them, if you have multiple credit cards with them, if you go back to them with great payment history that you like on auto loan, you can get a pre-approval letter for a lot less for you to walk into a dealership with and save a lot of money. But this client came to me with a lot of issues on her report. She had, you know, she had a bankruptcy, she had multiple, late payments and charge-off accounts. So we were able to rectify it within the 6 months, and I was able to help her save $36,000 on her auto loan, but now she's a proud homeowner. So that kind of goes to show how much money you could save by really investing and repairing and restoring your credit. So, another way to leverage credit right now is, taking advantage of 0% balance transfer. So a lot of banks are offering it right now if you have great credit. And you could, transfer your high interest balances on a couple of your cards onto 0% APR credit cards. But, being mindful of the time that the period only lasts for a year and a half. And I helped a lot of clients save money this way as well. So the changes that you need to know about the banks are getting a lot tougher with the market changes. Approvals are a lot tougher. Everything is instantaneous. So what I mean by that is timing is really important. I had a client come to me exactly 2 months ago. Right now it's September. So he came to me on July. He got denied for SBA loan because his credit wasn't good. Everything on the paper looked awesome. Yesterday, he came back to my office. I applied for an SBA loan for him. He left my office exactly 10 minutes later because he gave me the access to his portal for me to manage for him. He got approved for $115,000. That's $115,000 that he would have never seen if he had not worked on his credit 2 months ago. So timing is really important because SBA loan, it's closing in a couple months. They say PPP loan, it will be open again in a month or two, but it's all about timing. And if you restore your credit, or if you improve your credit in the right time frame, right now you could take advantage of a lot of great programs with low interest to help you, be funded for your business or to help you with, your bills with everything like that. And third, banks look at usage and payment activity. They're not going to give you the credit line increase to somebody who's only paying minimum payments, right? So it's all about having great relationship. And this is very important. A lot of things are going to change in the credit world with new FICO system that will be implemented in towards end of this year or beginning of next year. This will be implemented in mortgages and a lot of different approval process. So that would kind of look at the bigger patterns to determining your credit score, which is a lot about how much are you using your credit cards? Are you paying just a minimum payment? Are you paying multiple payments a month on your credit? So that's kind of what's going on with, in my end, but I've been very busy helping clients with business credit, but also personal credit. But business credit is always stringent upon the owner's credit. So I had a lot of fraud issues with a lot of clients who wanted to rectify to take advantage of what's going on, and just a lot of clients with, mistakes in the past. I wanted to rectify it. And right now it's really a good time to refinance your mortgage or even get a mortgage, but making sure that your credit's in check before you move forward with anybody. So yeah, that's about it. And, as you know, I have an office in Garden City, I have an office in Queens, office in Seattle, but I have clients even in Hawaii and Alaska. I could help any clients in the 50 states, and the consultation is free. So yeah, that's it. And I want to leave it open now for any questions you guys may have.